Worried that a VAT is going to make a Roth IRA a bad idea? Hi, this is financial planner Sean Mullaney. Let's discuss. So, people love Roth IRAs. I've done a bunch of videos and blog posts on Roth IRAs. I myself am quite fond of them. But there's this concern sort of out there in the financial planner world and the personal finance world that says, well, wait a minute. This Roth IRA where we don't get any tax deductions, what happens if they go to a VAT, right? So a VAT, value-added tax, it's basically a glorified national sales tax. So in theory, what Congress could one day do is they could say, hey, we don't like this income tax. There's all these forms and complexity. So what we're going to do is we're going to do a VAT or a value-added tax. So every time you buy goods, sometimes services, right, we're just going to assess this value-added tax and we'll collect our revenue that way. Well, if they did that, they totally scrap the income tax and they go to a VAT, guess what? Everybody in the traditional IRA or the traditional 401k is going to be thrilled. They got a tax deduction while we had an income tax system. And then years down the road, when we scrap the income tax system, they just take the money out of the traditional IRA, traditional 401k, no tax, great. And people who did a Roth IRA or a Roth 401k are like, wait a minute, we never got a tax deduction. Now we got to pay this VAT anyway. There was no benefit of doing that. We should have done traditionals. Okay, let's calm down for a second, all right? Few thoughts on this. First of all, do we really think in today's political climate where the populist left, those who are populist and liberal, and the populist right, those who are populist and conservative, are ascendant, do we really think they're going to enact a VAT? All right, a VAT does two things. One, it gives the federal government a totally new power. And two, it's regressive, right? Because rich people tend to buy a lot less as a proportion of their income or wealth than poor people, right? Poor people usually spend something like 100% of their income. If we go to a VAT system, poor people essentially are going to pay a tax on almost all of their income every year, while the rich people who, if you make $1 billion every year, it's going to be very hard to spend $1 billion. So you're going to pay tax on a lot less of a share of your income if we go to a pure VAT system. So under today's politics, I just don't see it happening anytime near term or midterm. All right, let's just assume that I'm not getting the political analysis correct, and that's not a bad assumption. All right, well, then let's impose a VAT. What would happen? Here's what I think would happen. I think a VAT would be an add-on to today's income tax system. I don't think Congress is going to say, hey, let's give ourselves a new taxing authority and give back an old taxing authority, right? What's probably going to happen if the United States ever adopts a VAT is they will leave the income tax system in place. They might lower the rate a little bit, and that's a hope, right? That's not a guarantee. And then they'll impose a VAT in addition to, not instead of, the income tax system. What that means is, essentially, you're still going to want to have a Roth IRA. In a VAT world, a Roth IRA is actually going to do really well. And in fact, you're going to be a little happier that you had a Roth IRA than you were in a non-VAT world. Well, how the heck does that work? Well, assuming that they keep the income tax in place in a VAT world in the United States, I think that's a really good assumption. Look, you could disagree, but I think that's a great assumption. Think about funding your expenses when everything's subject to a VAT, right? You want to go buy a car for $20,000, and now that Congress puts like a 10% or a 5% VAT on that, let's say it's a 5% VAT just to make the numbers relatively simple, right? So in a non-VAT world, that costs $20,000. In a VAT world, that costs $21,000. 5% VAT, 5% of 20 is, by my math, $21,000, right? So I want to go buy a car and I have either a traditional IRA or a Roth IRA. Well, guess what? If you take the money out of the traditional IRA, you got to take more than $21,000 because you have to pay tax on the withdrawal and you got to pay, that tax on the VAT piece, right? So essentially what happens is in a VAT world, you wind up paying income tax on a VAT if you use a traditional IRA, right? Because you don't get to take just $21,000 out of your traditional IRA to go buy a $21,000 car. you got to take $21,000 plus the tax on all of that, and then the tax on that. It's a bit of a circular calculation. But, depending on the tax rate, you might have to take $25,000, $30,000 out of a traditional IRA in order to actually net out that $21,000. What if you have a Roth IRA instead? Guess what? You just take the $21,000 out, no income tax on that. Essentially, the income tax on the VAT is a tax villain the Roth IRA slays, right? So if we're thinking about planning for the future and we're thinking about Roth versus traditional, there are many factors to consider. But if we're only thinking about the VAT, the possibility of a VAT in the future, what we're going to want to do is we're going to have a Roth IRA. Now, of course, that's only one of many factors. But in a VAT world in the United States, the Roth IRA defeats the income tax that's assessed on the VAT when you take it out of a traditional IRA. So for those of you who have a Roth IRA and are worried about the VAT boogeyman, I'd say just calm down. What's most likely to happen is you're going to be happy having that Roth IRA. Let me know what you think about Roth IRAs and the potential of future VAT down below. Hope you liked this video. If you did, please mash that like button and subscribe to my channel. Thanks so much.